So what's the reason it's going to go up, and when?
Oh, it's going to go up huge.
When?
And now. I mean, now is the bottom.
If you like seeing billionaire Ron Barron say that the Tesla stock bottom is now, and you like seeing that the stock is about 5% up today while the markets are down, click the like button. I will go through all of today's Tesla stock news, but I think Ron Barron is driving the stock up today.
Now is the bottom.
Okay.
And so what they're doing is they're going into robo-taxis, and they're going to make the low-cost car. So they're making the low-cost car, except they're making it, they have excess capacity right now. They have capacity to make 3 million cars a year. They're making 1.8 million. So there's 1.2 million cars they can make extra in an existing facility with no more capital, and they're not going to make the cars direct cost as cheaply as they did before, as they expected to, but overall, until they expect to do 5 million of these new cars. No one has the compute, no one has the data.
But just give me the timing. That's the whole game.
Now.
Now?
Now. It's now. All the cars are going to be electric, and I think this hybrid is just a sort of a holding off action so the automobile companies don't have to lose money on the electric cars. But the electric cars, I think, is going to be all the cars 10, 15 years from now. And I think hybrids, I know you love hybrids, that's not going to last either. They're too expensive and they're not effective enough, and they're not going to be part of the mix either. So it'll be all electric.
Ford just reported its earnings, and it's very interesting. Pay attention. Their EPS is better than expected. Revenue is slightly worse than expected. But we look at their EV business, and it's a whole different story. This is a direct quote from Ford. This is not me saying it. Revenue is down 84% in Ford's EV business, basically, due to industry-wide pricing pressure. You can replace industry-wide with Tesla pricing pressure. Their revenue basically disappeared, and the losses remain massive. Naturally, Omar concludes that Elon's tweets caused Ford's EV revenue to fall 84%.
The reason the stock is down is not because of the quarter. The reason the stock is down...
Well, the stock's up because of the stuff that he
said. Well, the stock's down so much.
Well, it's down 35% year to date. It's down 1%, or it's up 1% over the course of the last year.
Yeah, it's not so exciting to be up 1% in a year when everything is, the market is so strong. I don't worry about short term, but I do look around all the time and see everyone getting rich, and I'm not poor, but I haven't made a lot of progress in the last 3 years. So therefore, I think it's like a rubber band. I'm going to catch up again. So what I think about the reason the stock is down is because people were concerned that he was going to abandon the idea of having a low-cost car and go all into robo-taxis. That's the reason the stock is down. And then there was a report in Reuters said he's canceling this new factory that's going to make low-cost cars, $25,000 cars, competition from China. So there's only one company in China that's profitable, by the way. That's BYD, Warren's company, Buffett's company. And that's a company makes $1 billion a quarter, and our company makes $4 billion a quarter. No one else makes money. Ford loses so much. General Motors, everyone loses money on this. It's much more complicated to make these cars.
And GM expects to lose $1.7 billion on Cruise, implying cumulative losses since GM's acquisition in 2016 of $11.5 billion. Now, you could say, oh, Tesla is not making money from FSD. Hold on. Aren't people buying FSD? Tesla is investing a lot of money into FSD development, yes, but people are actually purchasing it and subscribing to the subscription. But you cannot buy FSD from GM. You can only take a ride on one of their robotaxis, of which they have very, very few. And Ron Barron today on TV said that it costs $250,000 just to build one robotaxi for these companies. I think that number is lower now, but the point is it's really high.
They've sold 6 million cars, and 3.5 or 4 million are collecting data. So the data is what's really valuable. They're doubling their amount of compute every 90 days.
I don't disagree with you. The question is a timing question of how quickly you can actually put these things into the wild. Just give me the timing. That's the whole game.
Now.
Now?
Now. It's now. People think it's forever.
When I say now, you believe on August 8th
they're going to make
that they're going to announce robotaxis that will be available now?
For 20,000, well, they're going to talk about it in August. 08. $20,000 car, they're going to make $40,000 or $50,000 a car a year. And if they have 1 million cars, 2 million cars, 5 million cars, they're going to make hundreds of millions of dollars.
I believe that's the promise of the company, and I think it's amazing. The reason I'm asking the question about the timing is I think there's a view that those vehicles are not comparable yet to what Waymo or the other guys are doing. And by the way, those guys can't even do it in some cities, most cities, actually.
You will be amazed at how quickly they'll come. I mean, maybe it's not this moment in robo, but it's certainly this moment in autonomous.
And for the government approval that would come with that?
Well, it takes a while for all those things to happen, 2 or 3 years for everything. But they're going to make hundreds of billions of dollars a year on that business. Hundreds of billions, not including the batteries, not including the AI, not including, robots.
Tesla's pay package for Elon Musk.
Well, I think that the class action lawsuit for someone who had 10 shares or something, and the lawyers wanting $5 billion, that's crazy. And so the way it seems to me is there was a contract that was arranged and arrived at and agreed to, and how do you go back on a contract? This doesn't seem fair. And the only reason the company is surviving because the guy slept on the floor under his desk.
Jason says, if you vote against Elon's compensation package, you're the type to enjoy setting your money on fire. Because if Elon feels like he has been wronged, you do not want to be on the side that has wronged him. And yes, it is deeply wrong to not pay someone for 6 years of excruciatingly painful work while they outperformed so much that it took everyone's breath away. Elon is owed this compensation package. He has earned it as well as the voting power that comes with it. He will admit none of this because he's very smart. He will not advocate for himself, but don't be naive. Tesla investors need to step up and not only do what's right, but what's rational. This really matters to Elon, to the future of Tesla, all of its employees, investors, customers, and suppliers. I have given 100 times more thought into this compensation package issue than anything related to earnings or the stock price, and it worries me greatly that many of our largest investors fail to fully comprehend the implications of a no vote. Set your stock price expectations aside for a moment. We all recently witnessed how quickly the stock price can change over a few words on a report and some new disclosures about future plans. These things don't matter in the long run. This vote does. Elon has done an incredible job steadily growing Tesla since the beginning, and he will continue to do so if incentivized. Please think long term. Please vote carefully. And now I will go through all of today's Tesla stock news, starting with a Tesla bear, sort of, turning bullish, well, specifically about FSD. It's Fred from Electric. I am willing to admit that things could start to move in the right direction quickly, making it interesting. Tesla now has the AI training capacity to compete with the biggest AI players and is growing fast. The automaker is taking a similar approach as it did with battery cells, buying everything you can get your hands on from suppliers and building your own. For batteries, that means buying from Panasonic, LG, CATL, etc. and building 4680 cells itself. For AI training compute, it means buying servers from NVIDIA and building Dojo. It worked for batteries and it could work for AI training also. I think Tesla deserves a meaningful credibility bump in the self-driving space with V12. Honestly, if I see decent improvements over the next few updates, I might become a true believer. I had FSD beta on my car for the better part of 2 years and saw very few improvements. V12 alone felt like a 20 to 30% overall improvement, and I'm now way more confident when using FSD. A 20 to 30% improvement is a major understatement. Look at this pickup truck and look at what Tesla is seeing. It is seeing that it is going to turn right before it does, even though the truck is not signaling that it is turning right. And I never had intervention-free drives with FSD V11, but with V12, I have had many so far. Now, of course, many of them were relatively simple 10 to 15 minute drives, but that never happened on V11. And in any seriously difficult situation, construction zones, serious traffic jams, it would be useless. I mean, V11, but V12 can actually handle a lot of these. It might do something rude, but it doesn't jeopardize my safety usually like V11 did. So the problems that the software still has, they're not nowhere near as big as what V11 had, and Fred admits that too. I still see some significant issues, but they seem to be more fixable. As I said in the past though, with any praise of FSD, there should come a clear message that it's important to remain extremely vigilant when using FSD. You need to be ready to take control at all times. I definitely agree. And at the risk of repeating myself for 1,000 times, Tesla should release FSD disengagement data. I have observed one thing with my disengagements though. Let's say I have a drive with no interventions. At the end of the drive, I usually take over or I disengage. Not because the car did anything, but because I just arrived. I don't think that should count as a disengagement. So Tesla needs to differentiate between, okay, you're good now, between, uh-oh, the car did something stupid. And sometimes I just take over because I don't like the navigation directions and I want to go through a different area. That definitely doesn't count as a critical disengagement. For example, yesterday it took me through a road where I had to go through about 7 intersections with 4-way stop signs. I hate those because I have to pay so much attention when going through them. I would rather take a slightly longer route, which will maybe take me 20 more seconds to get to my final destinations instead of going through these annoying intersections. But a robotaxi could easily do that. I just don't like supervising through an area like that. By the way, it performed great through all of these intersections. But seeing Fred turning into a bit of a believer going forward, perhaps especially if FSD keeps improving at this pace, that's a big deal because he has been very critical of FSD, which also means investors that before didn't really consider FSD at all, now they are going to start thinking about it. And if that happens, what do you think is going to happen to the stock price? Now, Electric seems to think that Tesla's stock just surged because of AI and FSD, but I don't think that's the case. I think it was because of new models coming out much sooner. AJ has just done some really good analysis. Pay close attention to this one. This analysis demonstrates that the likely long delay of the first FSD end-to-end release was caused by a significant lack of compute, likely driven by slow Dojo production and or bringing it online. This is a chart from Tesla which was published last year in June, and you can see that if Tesla continued at this projected growth rate, by now Tesla should have had 72,500 H100s. And just now Tesla stated to have 35,000 H100s, not H100 equivalents, but H100s. That's very important to understand. Tesla also supplied this chart showing 38,237 H100 equivalents. Big shout out to AJ for counting all the pixels, because that leads us to a conclusion that Tesla does have some Dojo compute power as well, which is becoming significant. However, based on how much compute Dojo provides, Tesla already expected to be at the current level back in December, specifically with Dojo, but you can clearly see that Dojo is now not nothing. And if all of a sudden there is a major issue with NVIDIA, Tesla has hedged its bets with Dojo. We got some really good news here. I think this is a Toro listing, but I'm not sure. Basically, this guy is renting his Tesla out to people, and a potential customer says, I just want to confirm that this car comes with the latest FSD. That is a primary reason for me booking it. Clearly, there are people that are highly interested in experiencing FSD. And if you think that the interest is not going to get much higher when Tesla starts improving FSD even further, I think you will be mistaken. Steven had a few words to say. It is amazing how stupid investors are. The FSD V12 demo, subsequent progress, and obviousness of Tesla's unassailable lead, which will unlock a $10 trillion opportunity, are completely ignored. In fact, Tesla's stock is down 30% since the August 2023 FSD V12 demo, but Tesla giving an update on an 18-year-old plan of lowering vehicle costs causes a frenzy and the stock surges. It hurts my brain, says Steven. Now, a lot of investors were expecting Tesla to recognize a large amount of FSD deferred revenue, but Tesla didn't really do that in the last quarter. It only recognized $281 million. For example, in Q4 of 2022, Tesla recognized $411 million. So Tesla's deferred balance continues to grow and is now at $3.54 $4 billion. The latest FSD version continues to roll out. I don't have the version yet, but I'm looking forward to it. But knowing that V12.4 and 12.5 are around the corner, I don't care as much about this next version as I do care about 12.5. That's what I am really excited about. This is an important piece of information from the 10Q. Tesla only expects to recognize $848 million out of the $3.5 billion in deferred revenue in the next 12 months. This suggests that Tesla does not expect to completely solve FSD within 12 months, but that could be an accounting thing. I personally don't expect Tesla to solve FSD in the next 12 months, but I do expect it to get significantly better. And we do need FSD. This Uber driver is watching TikTok while driving. I think this is a pretty important piece of news that many missed from the earnings call. This is from Lars, who is the president of vehicle engineering at Tesla. We are finalizing the engineering of Semi to enable like a super cost-effective high-volume production with our learnings from our fleet and our pilot fleet and Pepsi fleet, which we are expanding this year marginally. In parallel, as we showed in the shareholders deck, we have started construction on the factory in Nevada. Our first vehicles are planned for late 2025 with external customers starting in 2026. Basically, what Tesla is sort of saying is that the current Tesla Semi is not good enough. We're going to make it better. And so that's why Electric calls the Tesla Semi version shown in December of 2022 a Tesla Semi 0.5. But I think one big reason why all of this has been happening is because Tesla probably does not have enough batteries made in the US which would qualify for these huge credits from the government. So I wouldn't call the Semi from 2022 a Tesla Semi 0.5. I think it's more like the next Semi is going to be Tesla Semi 2.0. If Tesla had USA-made batteries which qualified for the tax credits, I think Tesla would have already started volume production. James says, don't shoot the cat messenger, but Farzad did say it's a very fair analysis. James is talking about the US tax credits, and his conclusion is that Tesla is making a lot of money from these. And because Tesla sets price per the market demand, if for example the Model Y didn't qualify for the $7,500 tax credit, Tesla would need to decrease the price by $7,500 to sell the same amount of volume in theory. But we also know that many people don't know about these tax credits. We have seen many surveys like that. But in total, in Q1, Tesla basically got $754 million from the US Treasury, which was added to Tesla's combined overall automotive and energy gross profit. So why is this important? If anything happens to the IRA legislation, or if when the new president gets elected, it could be a risk to Tesla's earnings because a lot of these policies could be removed. Omar finally had the first critical takeover on FSD V12.3.5 yesterday in his first 12 days. He says, I don't think it actually would have hit the Chevy Bolt if I had let it go, but it was too close for comfort due to an issue where it hesitated before completing the lane change. And I have experienced something slightly similar. The first time it happened to me, I just took over very quickly, way too soon to tell whether there was any danger or not. The second time it happened, I waited until the last millisecond and the car just hit the brakes and stopped quickly. And after the car stopped, there was still a comfortable distance between me and the other vehicle. Now, if I had a passenger in my car, there would have been a scream probably. But the reason why I waited until the last moment is because I sort of saw it coming. So it wasn't like it came out of nowhere. The car was doing something a little bit weird and I just let it play out what it would actually do. Tesla opened 297 new superchargers in Q1, a new record for the first quarter of the year. You can sort of see that the growth is not exactly linear. It's slightly curving up over a long period of time. Now, we all know that EVs are much heavier than their gas-powered vehicle equivalent. For example, the BMW M3 is much lighter than the Performance Model 3. And by much lighter, I mean they are basically the same. Is this weight with the gas tank full? If it's not, then the BMW is actually heavier. Things are changing. The Xiaomi CEO said, other than Tesla, There's no better vehicle than Xiaomi, so he is saying that Teslas are better. When your competitor says you are better, yeah, I think that means a lot. This is a great chart. The next time you hear someone say, "Oh, EV batteries, you just need to replace them so often," and because they just fail. Well, look at this chart. EV battery replacements due to failure from 2011 to 2023. You can see that before, yeah, that argument was sort of true until 2014 and maybe until 2015, but starting from 2016, nah, the batteries have gotten really good now. All of this is based on recurrence data related to select models based on a community of around 15,000 drivers. So that's quite a bit of data. Model Y is number 1 and the Tesla Model 3 is number 2. I think that Model Y is higher because it came out after the Model 3 came out, and therefore the tech has been improved. But in practical terms, there's really no difference between the Model Y and the Model 3 in terms of battery. Sawyer has a bit of a warning to Tesla stock investors. Here's my read on the highlighted part. Elon said more affordable models that utilize aspects of the next generation platform could launch in 2024 or early 2025. To me, this will start with a refreshed Model Y. This will enable Tesla to reduce the cost of building that vehicle, enabling better affordability. A whole new model that is even cheaper will probably come at a later date. Sawyer has some pushback. No, these will be new vehicles, but Sawyer thinks it will be both. There's a new Tesla stock note from Morgan Stanley. In our opinion, the Q1 conference call did not feed into the widely held bear view that Elon Musk could be shifting the AI emphasis away from Tesla towards other non-Tesla entities like X and XAI. In fact, quite a good deal of the investor letter and conference call was devoted to the significant ramp up of computational horsepower being assembled by Tesla. Morgan Stanley says that many clients we speak with feel any growth would be too bullish to assume as a base case. That's despite Elon Musk saying that Tesla will have positive year-over-year growth. Has China already won on small EV? New model strategy clearly seems dialed back. In our opinion, Tesla going for bunt singles and doubles rather than home runs. This strategy is more akin to a Toyota continuous improvement or Kaizen approach to conventional EV development rather than a giant leap. This is because A, the Chinese may be able to quickly copy any conventional non-autonomous EV development, and B, Tesla wants to concentrate far more of its incremental capex and research and development efforts to solving autonomy. And they point out that Elon Musk said, if you don't believe that Tesla is going to solve autonomy, you should not be a Tesla investor. Morgan Stanley also lowered their 2024 delivery estimates by a little bit, but they significantly increased their gross margin expectations. They increased the margins to 14.3% versus 9.2% previously. Operating margin has also been increased, and their EPS estimate has increased significantly from $1.12 to now $1.73. But they expect Tesla to burn more cash than before. And largely that's because Tesla is going to be spending more money on AI developments. And look at this human-like behavior from FSD. This is incredible. First, to date has increased the number of EVs it will let go of by 10,000 units, now planning to sell 30,000 of its purchased electric cars this year.
They had to code every single thing that happened.
Right, now it's all AI.
It was impossible. And so therefore they weren't making progress for 2 or 3 years. They were at a plateau. And now what's happened, they have version 12. They have all this enormous amounts of data, and now they have compute to figure out, humans can't do it. Now they have compute to figure everything out. And so now you're on the verge with autonomous driving in your car. So what's going to happen is that I thought the idea had been that you're going to sell a lot of cars. So as a result of that, once they have those cars out there, you'll sell autonomous driving. And he said the other day that he's negotiating to sell autonomous driving for some other cars too. No one has the compute, no one has the data.
Before becoming a Tesla stock investor, Ron Barron is someone who I watched a lot. And he influenced my decision when it came to becoming a Tesla stock investor in early 2019. And make sure to click the like button. This is it for today's Tesla stock news. Thank you so much to everyone clicking the like button. It has been really helpful when it comes to overcoming that partial shadow ban on my main channel with 40,000 subscribers. As you can see, every video I published on the Elver channel, it got only about 50% of the views that it would typically get. You can see another video here. Here's another one here. So thank you so much for clicking the like button and subscribing to this new channel. I will probably just keep publishing videos here and not on the old channel. Thank you so much for watching, and I will see you in tomorrow's episode.